I'm delighted to have in studio today Jerry Neumann, who is a retired venture capitalist and now prolific writer across a number of mediums. Jerry, thanks so much for joining the show.
Thanks, John. Glad to be here.
Well, I want to start with your career. Again, we were just kind of joking in the green room about how do I possibly introduce Jerry Neumann? Because depending on kind of the chapter of your life, I think you'd have a very different title. You've had just doing a bit of research, IBM engineer, some consulting, some operating roles. I already mentioned your VC experience, and now you're a writer across many of the mediums that this audience probably finds fascinating. So talk me through, if there is one, the kind of that through line and progression of your career.
Yeah, so I think the through line is that I get bored very quickly. I no, I engineering was my first love. I wanted to build computers when I was a kid. I was a total computer geek. Went to IBM after college and helped them build computers for a few years. And then I realized that, I wanted to know more about what was going on outside the world. I wanted to know why somebody would show up in our offices and say, "Hey, you need to implement this new feature." And the engineers would be like, "Well, that's stupid. It doesn't matter what you think, you're implementing this new feature." And to me, there was this whole world outside saying, what should this product be that I knew nothing about? So I went off to business school. I went off to consulting. Those were like the two fastest ways to learn, what businesses did. Um, and then when I was in consulting, I ended up in the bankruptcy group because if you want to learn quickly how a business works, bankruptcy, just step into the chaos. Um, so I did that for a while. I loved it. And if I could have stayed, had the energy of a 28-year-old forever, I would have stayed doing it. But after a bit, it was tough. It was tough work. So I ended up going back into technology. I went to a company called Prodigy Services, which was one of the early internet companies. And I was there. I ran finance for them there. Um, well, I did a bunch of finance jobs, worked my way up into, I don't want to insult whoever was the actual CFO at the time, who I can't remember. Um, but it was interesting work. We didn't have the financing AOL did. They ended up starting to surpass us. And I went to a company called Omnicom Group, which I don't know, a lot of your listeners, I'm sure, know Omnicom. They were one of the primary consolidators of the marketing and advertising space. They hired me because they were trying to buy internet marketing companies back in the 1990s, mid 90s. And they were looking for somebody on the East Coast who could read a balance sheet and also knew something about the technology. And I think at that time I was the only person. So they were stuck with me. It ended up becoming a venture capital job because they couldn't buy good companies. Any good company that time would not have sold, right? It was sort of if you could buy them, they weren't good. So because going public was possible, right? So we ended up investing instead. So we kind of backed into being a venture capital division of Omnicom. We invested in some of the best companies of the era in internet marketing. We ended up making them a lot of money, but also not being being a volatile part of the business, as you might expect, especially after 2000. And they decided, to spin us off. So we spun off. We found some outside money. We bought the portfolio from them, and continued to run it for a few years. But we had no money to invest, so I ended up starting my own business. So I decided, all right, well, I'm going to go do what I've been investing in and start my own business. So with a couple of co-founders, we started a company. We raised venture capital. We built the business up, and then eventually the venture investors decided to replace us with a team, which I think, they said was more experienced. We thought they were just more controllable. And so me and my co-founders were kicked out. And at that point, I started venture investing for myself. I started angel investing. So using my own money, a bunch of the people who worked for us at that startup decided they didn't want to work for the new management, who was a little more corporate than us. And they went off to start companies, and I helped them find venture capital and invested in their companies. And I've been doing that. I did that for, I guess, about 20 years. So it was a long career. It was probably the one thing that I did for more than 2 or 3 years because it's always new. It's if you optimize around learning, then you're always learning, and that's what I did. And in the meantime, I started teaching. I they asked me to teach a class at Columbia on entrepreneurship. And I did that for about 15 years. I started writing partly as a way to think things through, partly to get my ideas out there. And so I've been doing those two things. I left Columbia about a year ago, spent some time this winter helping teach at the University of Utah in their entrepreneurship program, and and I've been writing. So that's my career arc. I don't know if there's
Well,
a through line there or not, but
yeah, yeah, very natural progression, I think, for most of us. Obvious next steps each chapter along the way. Yeah, you were a neighbor, as we were joking about, at University of Utah here in Salt Lake City. So you were one of those hobbyists in the garage at the early stage, just going back to where you started on kind of computer building, because I think that'll circle back around to how we're thinking about this ecosystem and AI.
yes. So, in the, well, when would it be? I guess it would have been around 1980 or so. I was, I think actually in the late 70s, I built my own small personal computer. Didn't do much, but it was actually a functioning personal computer. And my parents were like, okay, that's, he's working a soldering iron. He's like, 12 years old. And they let me take a couple local computer classes, programming. And they actually bought me a TRS-80, which I think was a stretch, but it was kind of set the pattern for my career from there. But yeah, no, I idolized Steve Jobs. I idolized Bill Gates. I mean, it's the first time I went to Silicon Valley, which was decades later. I was, well, like 15 years later, we were driving around. I'm like, pointing to the road signs, like that's Atherton. I mean, like, it was just all so well known to me in concept. But yeah, no, it was a total hobbyist era, and I found people who were also hobbyists. People were excited about it. A lot of people. Other people thought it was a fad or that it was dangerous or that it was going to all of our privacy would be gone, which may have happened. But it was very grassroots kind of thing going on.
Yeah, yeah. Well, I want to talk before we get to kind of investability of the AI stack, which maybe comes back to this whole issue of um, crazy and strange and the defining signals of early stage innovation that you've written a lot about. I want to talk about another piece of your writing just to kind of set the stage. And by the
Sure.
way, for listeners, uh, Jerry's Substack and his work at Colossus has just been outstanding. So I would highly commend that. But a couple years ago, I was just looking through your kind of blog flow. You wrote this piece that I found fascinating on whether AGI could actually become smarter than humans. And I think you took and correct me if you think I'm wrong, a somewhat unconventional or non-standard view. You use this progression of deduction to induction to invention. And you basically argued that there will be a limit at induction, if I read it correctly. It will not graduate or will have a hard time graduating to invention where humans are particularly gifted. It's been a couple years, as I recall, from the timestamp of that blog post. Jerry, has anything changed in your view of that progression of the LLMs given the innovation there?
It, it's a good question. So, this is when I was an undergraduate, I took a computer science course called artificial intelligence. And AI goes way back, right into the 60s. About when I was, before I was born, I think. And the AI that we learned there was expert systems, like trying to model the world and then figure out analytically what to do. And it just didn't work, right? I mean, it wasn't artificial intelligence in any sense. And it didn't, it worked in certain specific instances. Like, there were expert systems they could say like, here, oh, you've told us your symptoms. Here's what a doctor would say is your problem, right? And they worked, but they never became widespread because they were so, limited. Um, so that I think was like the deduction era, right? And then came machine learning and this kind of statistical analysis of you take a huge amount of data, create some sort of function around it that would then predict what you think what will happen next if you give it some precursors, right? So this was the induction era, and the kind of fascinating thing is that you can't deduce induction, right? You can't say like, all right, here's my logical principles, and I'm going to deduce induction. It just doesn't work because you could just as easily deduce anti-induction, and this is what I talk about in the in the essay, and this is not my idea. This is like Lewis Carroll, actually, of Alice in Wonderland fame, had this idea. He was a philosopher, and it's just it's just a fact. And then there's this idea that, well, induction is not all we do as humans. It's not how we think. We don't just induce things. Um, so there's this further thing that the philosophers have called abduction, and I said invention because I don't want to. Abduction is a little vague. There's a couple of definitions, and
Sounds like a workout I like to skip.
yeah, right. um, I didn't want to like get into an argument with the professional philosophers about it. So I said there's something that we do that's more than induction, and whatever that thing is, you can't use induction to find it. So if people think that the AI we have today is going to somehow self-improve into this, but somehow superior thing that we do to think, that's not structurally possible. Just like it wasn't structurally possible for the early AI to deduce its way into being, generative AI. And it's a little bit of a thought experiment, but it does seem to track the evolution of what's happening. So is it true? Well, I think that this is not something the AI labs don't know. They know that the inference machines they can't really invent things other than things that can be inferred from what already exist, which really limits you, right? You can have sort of incremental invention, but not radical invention, things that are very different from what came before. So they have kind of put these frameworks around it where the agentic frameworks, like the different ways of like stringing things together, where you could say like, all right, here's the process by which we can use inference and then do this and then inference. And so they put these kind of skeleton frameworks around the inference machines, which are quite good. I mean, it's kind of amazing what they can do now. And in some ways they do approach abduction, but I don't know if they truly are, right? So, and I think in the end, nobody has a great explanation of how people do abduction. Um, but part of it has to be around sort of our natural curiosity, our motivations for finding things, and our ability to kind of do scenarios in our head over and over and figure out like, all right, what's the best explanation for this? Like, even if we don't have enough data, right? Humans are great at doing things where there's just not enough data. And that's abduction. So can the AIs do this yet? I don't think they can. Um, it's a tricky question, though. But I don't believe that they can get to the point where they can self-improve to doing it naturally. I think you can put frameworks around it and kind of give them these crutches to do it, but that's not really doing it, right? Um,
Yeah, yeah.
so I,
Uh,
yeah,
it
I'm
reminds me of
monitoring
this.
it. I don't
Yeah,
know
no,
yet.
I hear you, and I think that's everyone's big question: is there a limit to this? Where do humans fit in? Where are humans at their best in complementing these machines? It does. There's this corollary I was reminded of just in thinking through your piece, Jerry, and that was I facilitated this roundtable in Singapore. It was just a bunch of CIOs and C-suite folks on the asset management side, and we were talking about just this issue on kind of integrating into the investment process. So this is a particular use case of your more broader assessment, and they used, I thought, a similar progression you've just described, which is collecting data, then interpreting data, and then ultimately making decision judgment, creativity based upon that interpretation. And the
Yeah,
argument in the room was largely that it was pretty good at one and two, but it kind of stopped short. That's where humans really were gifted, is in that third piece. And maybe the other facet to that same discovery along the conversation was that alpha, and this perhaps resonates with you, alpha is not found through kind of groupthink or herd think, right? And the LLM, as far as I understand it right now, is a representation of the full Alexandrian library of herd think. And so how do you kind of find non-conventional alpha opportunities if you're just basing all your decision making on what the model tells you? So there's maybe a couple things there, Jerry, but I'd love your thoughts on that.
yeah. So that's a super interesting question. I was just reading a draft paper from a couple of professors at the university at the U in Utah, Jay Barney and Rob Woopker, and they were talking about how AI can be used to generate ideas in entrepreneurship, which is my field. And there's a real parallel here, right? Because what they said was, well, it depends on what kind of opportunity you're looking for, right? So if what you're doing is you're looking for some essentially an arbitrage opportunity, right? And a lot of startups are like, I can buy this thing for cheap and sell it for more, right? And that's a great startup. Um, like that's you've discovered this profit, right? And you've just discovered a way to make money. And then there are some things where you are in a business that not many people know about. There's just not enough information for other people to compete with you, and you can make money that way. And I mean, this is actually probably a huge amount of the startups in America, funeral homes and auto dealerships where other people don't know how much money there's to be made, so they don't go into the business. And then there's this middle group, which is, I think, what most people think of when they think of the kind of really breakout startups where you create the opportunity, right? So you have an idea and it won't work at the moment, and you have to create the landscape in which it would work. So I think if you apply this sort of like what what are the things that are creating the opportunity for you as an investor? Certainly, you can discover an opportunity where something's just mispriced, right? You can also find places where you can create algorithms that do this sort of thing, right? Like systematically find mispriced things and buy them, right? Which a lot of hedge funds do, the quant funds. And those two things probably are in danger from AI because those two things are, the decision making, the third step in your three parts system, decision making. Sometimes decision making just comes from the data, right? I mean, you could apply rules, the rule being, hey, let's make some money, and that decision automatically falls out of the data you gathered. And in those cases, you're going to have a lot of competition. It doesn't seem like, and I don't know this for sure, but if you took a quant fund that had some long-lasting algorithm they used but kept it secret so nobody else had been able to replicate it, it would seem that you could use an AI to just reverse engineer it, given enough time, enough data. So those edges might go away. But the edges where you're really using human judgment, which I think is the kind of create the corresponds to the creation things. Those are the ones where obviously the AI can't do it yet. The AI doesn't have that sort of human judgment, doesn't have the kind of motivation, the curiosity to do that kind of thing. Um,
Yeah.
and it's interesting because judgment, the word judgment, it goes way back in entrepreneurship theory, back to the 1920s, and it does describe the things where there is no systematic process for finding the answer, and so there's this sort of mystical human judgment that people use to do these things, and so I think there's definitely a correspondence there.
Yeah. Yeah. So let's shift a little bit to investability, Jerry.
Mhm.
You've written a lot about cycles. I think we're both a student of these super cycle economists, Carlota Perez and Schumpeter. I've seen you write a bit about. We've talked a bit about those two folks on this show in the context of crypto and other computing paradigms. Um, Before we talk about the stack itself and where you think there's actually investing opportunities, let's talk a little bit about just identifying these super cycles and these computer platform shifts and perhaps different categories by which they exist. You actually made the point in a recent article I read in Colossus that some of these innovation ecosystems, again, we are not quibbling about whether they're revolutionary for the consumer or society here. What we're arguing is there investability opportunity? And you argue that some have these ecosystems for founders and investors that offer value creation to a very small number, meaning the value accrues to just a very few number of people, and others create this kind of explosion that has opportunity for hobbyists and VCs and lots of founders. And there's value that kind of is goes around and is spread fairly thin. So, how do you define which of these two AI fits in, and how would you know that it's one or the other?
Yeah, so I mean, I think you can explain this without the kind of long wave theory, which I know is controversial, but it does seem to fit to me into that theory. But I think so having lived through the computer revolution, like basically my lifetime coincided with the computer revolution. I remember what it was like, and maybe my judgment is skewed by that. But when you're thinking about making, and also one last caveat, that essay was aimed at venture investors. So when I said you can't make money in this, it was, can you invest in it from the outside and make money in it? Not, can you make money as somebody working in it or an entrepreneur? Obviously, there's money being made. So the question with any business, right, is you have it on innovation, it creates a ton of value. The question obviously is who gets the value, right? Like who gets to keep it? In some cases, the innovation creates value for society and society keeps it. And usually that happens. In other cases, certain specific companies can capture the value and keep it. And where the value goes depends a lot on your basic business forces, the Porter's five forces, right? How much competition there is, what's the relationship between suppliers and customers and the producer, et cetera. The stuff we all learn in business school. The question is, why do sometimes entrepreneurs, small companies get to capture the value, right? If the value is so big and so obvious, then big company will take it, right? I mean, that's because it's right there. They can do that. Usually when it's not obvious, when people disagree about whether there is value, that's when the big companies say, let's hold off and wait, right? And the kind of quintessential example is IBM waiting until 1981 to introduce a personal computer after Apple Computer had already gone public, right? There was clearly a market. They, had a couple $100 million in revenue, and IBM finally said, "Okay, all right, there's a market here. We believe it now." Right? If they'd entered 3 years earlier, Apple never would have been able to go public, and it would have changed everything, right? Um, so the question with AI is, do the big companies believe there's value here, and are they going after it? Because if they're going after it, it's very hard for smaller companies to compete. Um, and the answer is obviously, well, yeah, right. I mean, every big company knows there's a huge amount of value. There's no surprise. And I think in the essay I talk about surprise. What I really mean is like nighty and uncertainty, but surprise is a little easier to digest. So okay, is anybody surprised by AI? Are there a lot of people who think, well, AI is just it's just a fad, a myth? I mean, even the internet in 1999, some people were like, this is a fad, right? So I think you need that kind of disagreement for there to be opportunities for smaller companies. And I don't think there is. I mean, clearly some people are like, oh, this is stupid. I'm on Blue Sky, and there's a lot of people on Blue Sky who are like, oh, this is useless, it's worthless, it's stupid. But that's obviously not true, right? It's super useful, it creates a ton of value, but everybody knows it. And that means the big companies who've raised a lot of money are going to try to dominate it. This doesn't leave much opportunity for smaller businesses or businesses that are easier to invest in, especially for venture investors. But then you say, well, okay, if there's a bunch of big companies who raise a bunch of money and they're all competing for the exact same thing, how valuable is that to them? Because, one of the five forces is competitive rivalry, right? And there's a huge amount of competitive rivalry. They're going to compete eventually on price. They're going to decide, well, somebody else in my ecosystem is making money, like your OpenAI, and somebody's using your system to create an app that people are using, and that company's making a lot of money based on your platform. Well, why wouldn't you just subsume that into your platform, right? I mean, you could either create it or buy them, or probably just create it. Why would you let somebody else make money from your platform when you need that money because you're competing with Anthropic and you know Google, and I mean probably everybody, every big company. So I think what that does is it drives profitability at least for the generative models. The model company is way down. It means that the kind of the next level up in the stack, those things start to get commoditized as well. And eventually the value keeps getting pushed higher and higher up the stack until some of it's in the hands of consumers, but a lot of it's probably in the hands of the companies that are using AI to make their own businesses better. So, I mean, I think I think that's just basic business analysis. I think the interesting part there is in the essay was comparing it to the shipping containerization revolution, which created a huge amount of value. I mean, if you think about it, right? I mean, look around, right? Everything's being shipped. I mean, the globalization phenomenon was partly a result of shipping containerization, and yet who made money from it? And if you look at the shipping containerization industry, almost nobody made any money from it. I mean, the big shipping companies probably made more money from it, but they were already big shipping companies when they did it. The guy who invented shipping containerization, or invented, so maybe the wrong word, but made it happen, Malcolm McLean, he actually made some money from it, and so did his sole venture investor. And yet, and then he sold the company to RJR and made a bunch of money, and then he actually took the money and invested it back in shipping containerization and lost it all. But so there were a couple people who made money, but not a lot. It wasn't like, the personal computer industry. Like, think about how many people made money along the way, and not just in personal computers, but in disk drives, in the internet, in every single thing connected to a personal computer, right? Software. I mean, it was a huge explosion of people. If you look at the Forbes 400 and you go down the list, I'm sure you can find scores of people who made money in personal computers, and you'll find really none who made money in shipping containerization. Um,
Yeah.
so, what's the difference? Well, nobody was surprised by shipping containerization, right? Everybody saw the idea and said, this is a great idea. This is going to be the future. If this guy can get past all the hurdles that have been put in place to making it happen, then it's obviously going to be something that everybody's going to use and be a huge amount of value in it. So we all need to do it. And he launched his first shipping container ship. And within a couple of years, there was government bodies putting regulations in place. I mean, it was completely different than the personal computer industry. And just in the quick the how quickly everybody entered and got involved. And I think that's the difference.
So
So
the surprise element, Jerry, I think is really interesting. No one's surprised by AI, just to kind of draw out that container approach. But isn't there another layer to these computing paradigms? Having spent time in Utah, we're very proud of Clayton Christensen, right? And
mhm,
Clayton Christensen, the whole innovator's dilemma, once argued that actually the main reason, the primary reason that big incumbents are impotent to these big shifts is that they can't possibly adjust. They whip at these technologies because, first of all, the next big thing looks like a toy, he was famous in saying, but also they can't upset, they can't disrupt, they can't creatively destroy their own business model. So shouldn't this kind of whole range of sideshow and novelty companies be able to Uber, if you will, those big seven? Or why are they able to vertically integrate in this computing paradigm differently than maybe Clayton and the rest of the previous innovations suggested?
yeah, so I think, Clayton Christensen and myself and all the other innovation, people thinking about innovation are the blind people in the room with the elephant. So yeah, no, I don't think his explanation is different than mine. I think he puts the emphasis in a different place. So he says that companies won't adopt innovations that their customers are not asking for. And certainly, I mean, I do remember this. I was young, but were people asking for personal computers? And the answer was no, not in the 70s, right? So in the essay, I went back and I actually went through the archives of the New York Times from the 1970s, and I counted how many times each year they mentioned the words personal computer, home computer, any of the kind of various words they use to refer to these. And it was in the 1970s, it was remarkably few. And which is funny to me because I was so involved and I was like, they must talk about it all the time. But the mainstream media did not talk about it really at all. And then, of course, when IBM entered, they started talking about it all the time. So, this is the same. This is what Christian would say is a big company will look at what their customers are talking about. And in the 1970s, their customers were not talking about personal computers. None of IBM's customers are saying, hey, you know what we could really use is something like your mainframe, but much less powerful. It can't do much at all. Maybe we could play a couple of video games on it, but it'll be a lot cheaper, right? Like nobody was asking for that, of course, right? So IBM was like, well, nobody's asking for this. That's not what we're going to build. Like they did build like a kind of personal computer, meaning a computer that a certain individual could use. I think it cost like $25,000 in those money of that day. And it was, pretty powerful. It was more like a workstation kind of thing. Nobody bought it because really what they wanted was more powerful mainframes. So this is what Christensen would say, well, this is customers not asking for it, and big companies saying, well, unless our customers are asking for it, we're not going to build it. Now, do you think customers are asking for AI? Well, yeah, right. They are. They're asking for it all over the place. So he and I agree. I mean, I agree with Christensen. He doesn't agree with me. I'm agreeing with him. I'm looking at it from a slightly different perspective, which is, things that are surprising are things that customers aren't asking for. And it's, again, I've got I've got the elephant's leg. He's got the elephant's trunk, whatever. But it is, I think, the same phenomenon, which is there are some things that companies generally hate things they can't predict. And by predict, I don't mean predict 100%, but say like, there's a 20% chance this is going to happen. If a customer is like, well, there's a 20% chance personal computers are going to change the world, then we should, invest at that level of confidence in this. And that's big companies do that all the time, right?
Yeah.
Um, so if you look at like an Uber, you mentioned Uber, why did the people who could have responded competitively to Uber not respond? Well, probably not because their customers weren't asking for it, although there was that, right? I mean, think about it. When there were certain analyses when Uber came out that the entire taxi market in the United States was only, $200 million. There's not enough revenue here for Uber to make a big business. Like that was the entire market across the entire country. Obviously, Uber's 5 times bigger than that by itself now, because they opened up a lot of demand that people didn't know existed. But the main thing was people were like, well, if we do this, we'll probably get sued because it's illegal in most places, right? And Uber was like, well, we don't care. You know, like what's the worst that could happen? They'll shut us down. Well, that might happen anyway, right? So there are these kind of things where people are uncertain about what's going to happen. And in that case, it was regulatory uncertainty. In the case of like Apple Computer, it was market uncertainty. Are there customers for this? How many customers? And those are the kind of things that big businesses just hate. And this is also what Christensen was saying. He just didn't use that language.
Yeah. Yeah. So I think as a segue to maybe segmenting the strata, Jerry, that perhaps the areas that might make some relative money, Bill Gurley and several others, it's not just Bill, have said this, that if you look back at kind of rail lane, I don't mean literal rails, but railways are maybe one example of this. Certainly the late 90s, you've already referred to that we all lived through the dot-com bubble with the fiber optic cables. All those companies are out
Yeah.
of business quite literally, but they kicked off this overbuild, this frenzy, this eruption, back to Carla Perez's language, that ultimately allowed builders and hobbyists and new entrepreneurs to create something great that we all take advantage of now. Do you think that those will be commoditized? Meaning the AI LLMs are those simply going to be commoditized railways that have been overbuilt? Supply will outpace demand, and ultimately it will just create maybe a lagged but a very powerful future building opportunity.
I don't think that they're overbuilt, and I don't know if they will be overbuilt. I mean, were railroads overbuilt? To some extent, right? They did go through, there was a railroad bubble, both in the UK and here. And it wasn't like there were a bunch of people who made money in railroads, or not a bunch, a few people. There's a good question of whether they made more money than was invested. So did they basically concentrate all the investors' money in their pocket? Did the investors make money? And, I'm actually not sure about that. It's a good question. Um, so the kind of the analog to the railroad track. So, okay, why did railroads make money first, right? There has to be some sustainable competitive advantage, and there was, right? There were economies of scale. So somebody had a railroad up one side of the Hudson. Jay Gould came in and said, "I'm going to build a railroad on the other side of the Hudson." Everybody freaked out. And he made money by, I think, shorting the other railroad, and then he didn't build his railroad, and then he, bought this. I mean, like, that's how he made money, right? He was one of the richest people in the country through owning railroads, but basically he made his money through stock manipulation. Um, but it was the competitive advantage was this kind of economies of scale. What's the competitive advantage for the model companies? There is some economy to scale, or in the sense of there's a huge fixed cost and a low variable cost, right? So that's part of it. And this could lock in the big model companies, and there could be 5 or 6 of them that could consolidate, and those companies could then end up making a lot of money. It's hard for you and me as investors to make money on that because what do we invest in, right? I mean, it could be Anthropic, it could be OpenAI, though that's looking less likely. It could be Google, or Amazon, or Microsoft. It's hard to know, right? It could be a Chinese company. Um, so I think it's hard to make money that way. Can you make money in data centers? Like in building the infrastructure? And I say the answer is yes. So actually, one of the beneficiaries of the shipping containerization boom was people who built ships, right? They had to build all new. The ships they built for containers were completely different than the ships that existed. Some of them were retrofit, but that was not a great solution. So there was actually a huge ship building boom for 5, 10 years. Um, And obviously somebody made money on that. Of course, that boom then went away once the infrastructure was built. And I'm not sure what happened to those companies. None of those companies were really public. There's probably a boom in building, in construction companies building container ports. Right, there was money spent, and there was definitely money to be made. Again, hard to invest in. Uh, I mean, I suppose if those companies are public, you could time the market, invest in them now, sell them later. Um, you know, it's that's a possibility.
Yeah.
Um, but yeah, no, I mean, again, it's just in the long term, you have to figure out where the value is going to be, and it's not going to be in continuing to build data centers.
Right, right. So we've talked a little bit about the LLMs themselves. You've talked about the infrastructure, kind of the equivalent of the ship, which could be the data center infrastructure, the fixed asset itself. Walk me down through the stack of the other. There's consumer apps, there's domain specific modules that you've alluded to. I'm sure there's other segments you've thought of, but kind of walk us through what potential investing opportunities could occur as you move downstream from the models.
Um, so the stack keeps changing. I think, since I wrote that essay, which it was a year ago, right? The stack has changed. There's a whole new, segments in there, and I think it's going to keep changing. So the way that I thought about it was, all right, who's the customer, right? And there's a lot of intermediary customers, but in the end, what I thought about from the shipping containerization point of view was, okay, it's the same thing, right? There's a bunch of intermediate companies doing it. There's brokers and there's, all these different companies that are involved. But in the end, I think the real value, like and again, we're talking about, are there opportunities to make small amounts of money? Yes, obviously. There always are, right? In anything. Um, are there opportunities to make a huge amount of money, to be like where the really big pools of money? I think those in the end get pushed all the way to the end of the stack towards the consumer. And with shipping containerization, like if you think about it long enough, and I did, I thought about it for a long time, like where did this value go? And in the end, I think, one of the companies that really benefited from this was IKEA, right? So IKEA was a small Nordic company that shipped these flat pack furnitures, around the region, but it wasn't cheap to ship, right? So, there was not a big company. Shipping containerization came around. They said, we can now ship these all around the world, and IKEA became one of the biggest companies in the world pretty quickly, right? So this, I think, they're not a shipping containerization company, but they were the beneficiary of the value that shipping containerization brought because they were ready to capitalize on it. So I think the analogous opportunities in AI are the companies that are closest to customers that are functioning. Their main goal is to do something that's already done, but cheaper. And also the AI makes it much, much cheaper so they can expand. And the key here is not that they're using AI to cut costs. They're using AI to expand their business and build their business that has already cut costs to some extent. They can say, like, now look, we can now offer this to a lot more people, right? And you'd think that, I mean, I don't think I can offer you an example that people haven't already thought of since that time. But if you think of like tax preparation, right? People who do tax preparation for less, for cheaper for average people, most people still can't afford it, right? So they're kind of in this like kind of mid segment, not the hard taxes, not the people who have like all sorts of complicated stuff going on, and not the people doing the easy stuff. They're in the mid section, right? They could expand that to cover really 95% of tax filers using AI and make it cheap enough that all of those people would pay for it and still make a lot of money, right? And this is sort of an obvious example. So I'm sure there are much less obvious examples that I haven't thought of. But clearly, like this is where the value is going to be pushed towards the customer, and that final layer between the customer, the end customer, the consumer is interacting with. I think that's where the value is going to end up.
Yeah. I think you've talked a little bit about, so if we think back to like World Common Level 3, part of the reason that they couldn't vertically integrate is that they were not well capitalized and they were not cash generative. In this case, you've got these LLM models that there is a real risk if you're developing in the middle, kind of a consumer app, a kind of intermediary product that they could just acquire you, right? Because they obviously want to vertically integrate down to where the profit margins are. Um, are there some protected domain specific? You mentioned tax. I've seen a lot of accounting opportunities pop up, law, legal, apps and agents seem to be very popular. Are there some protected domain specific areas that could offer some real opportunity?
I think the way I think about it is what can your company have? What resource does your company have that others can't replicate, right? And that can't, is not easily replicated by the model companies. And so I think, again, using tax as sort of the simplest possible example, the resource you have is your relationship with customers, right? And they trust you, like H&R Block, people trust them to do their taxes well. They've got a brand. And that I think is something that it would be very difficult for OpenAI to imitate. So there has to be something that you have that they can't just imitate, right? And I think that's obviously, again, just sort of basic business. Um, in so that part one thing could be the customer set. One thing could be that you have a data set that nobody else has. So if yeah, I mean, I've gone back and forth with a couple of people about some of these legal firms, like the people who are like, well, we're using AI to write legal documents. And part of it is, well, I mean, I could just go on Claude right now and tell it to write me a legal document, and it would write me a decent legal document, right? I mean, it's there's plenty of examples out there. You just free, just not free, but they're on the internet somewhere. Um, and they say, well, but yeah, but we have specialized knowledge. We have, and the more that we do this, the more specialized knowledge we have, and that's arguable. I could argue either side of that. But if you do have something like that, you might be able to build a data set that's informing your AI that other people can't replicate. And there could be a flywheel there where the more you do it, the more data you collect. I doubt that exists in any sort of text format. I mean, any text document, there's just so much text. I've been more impressed by some companies who say, well, we're doing something in the physical world and using not LLMs, not large language models, but generative AI that's using some other sort of token other than words, right? So actions or whatever. And because that data doesn't exist, on the internet, you can't just go and scrape a huge amount of, hands are doing this, right? Like for humanoid robots, how does a hand work? Well, I don't know, have 10,000 people pick up eggs in different ways, and train the AI to do that. Like, okay, that could be something that's not easily replicated. Because once you have it, obviously you've got, replicating it would mean redoing the same thing you just did, which may have cost a lot of money, and you already have it, so you can lower your price to put the other people out of business, like the railroads did, right? So this fixed cost, this sunk cost. Um, so I think there are opportunities. I think they are probably fewer than people believe. And I think that, will the big model companies, OpenAI, let's say they actually manage to go public, they have a ton of cash. How are they going to justify their valuation, which is pretty high? They've got to grow revenue. One way to grow revenue is to either acquire companies or just copy companies. They're like, all right, here's a place where people are making money. Let's just do that. And in a lot of cases, it's probably cheaper to just copy them than to buy them, at least in the current environment. So I think we'll see a lot of that.
Yeah. It's interesting. One of the things that we haven't talked about is the kind of physical AI, robotics. Now, again, you might have the same answer because it's Tesla that's working on the robotics, and you've got Waymo as an example with Google. So again, Mag 7, at least from a consumer standpoint, prominently active there. The other one we haven't talked about is the GPUs, the computing, the actual computing processing, NVIDIA. Are there any opportunities, subsegments, themes in there that you're excited about?
I'm not a huge believer in robotics as people pitch it. I mean, obviously we've had robots for 100 years. We've got my washing machine as a robot. I mean, things that do human tasks but are machines. I think, the thing that people are excited about is humanoid robots. And I think I'm not objective. I would personally not like to have a humanoid robot in my home. Um, but that said, it's you look at, you watch some drama about the upper class British back in the 1800s, and they had people wandering around their homes all over the place, right? Cooking and doing gardening and cleaning, and I mean maybe that's the future. Like you have humanoid
Yeah.
robots doing your gardening. I could have a humanoid robot go out and pick up all the branches that fell this winter. That would be nice. Um, I don't know. We'll see. I think though and if you believe that, you probably should be in China because from what I've heard, the one of the professors at Utah was went to China and he's telling me about what they're doing with robotics. It was far beyond what we're doing here. They've really focused on that. So we'll see. I mean, um, again, I think I do think that the generative AI stuff there will be more opportunity in things that aren't words. Um, and part of that obviously is, the robotic stuff. So it'll be interesting to see what people can do with it.
So robotics in China is perhaps a segue to my final question, Jerry, and that's to kind of put you into the simulator of a big LP CIO seat, right? So you've got all stages, so your previous life, but also all the way through late stage publicly traded companies, all asset classes. How would you play this theme across every segment and facet we've talked about so far?
Wow. Nobody's going to like my answer. So I know, you read my blog, so you saw that I retired from venture investing about a year ago, year and a half ago. And a big part of the reason, aside from getting old, is I just wasn't seeing stuff that I thought was investable for me as a smaller investor, an earlier stage investor. I don't have $1 billion fund. I didn't really believe in the smaller, the less capitalized AI companies that I was seeing, or the companies that needed less capital, I should say. Um, and so I just decided to quit for now. And then actually, I think January 2nd, I had sold all my tech stocks. Um, and that's, I think, if you believe in the long wave, that's where we are, right? We're at the plateau. Um, Now, the exciting thing about the plateau is that new opportunities are coming around. The personal computer didn't come out of nowhere. The personal computer became commercialized at the beginning of at the last plateau, really, the end of the previous wave and the beginning of the new wave. So if this is the end of the previous wave, the information communications technology wave, then it means that people are going to start doing something else, right? Nobody sits around on a plateau for very long. What that is, it's hard to know. But the personal computer, again, it didn't come out of nowhere. It came from the mainframes, right? Like the big computer industry. People said that stuff is really useful and interesting, and I would like to have that myself, right? I would like this to be used in ways that my big corporate, overseer is not allowing me to use it, right? I'd like video games. I'd like to do my personal taxes. I'd like to do lots of things on this that, you know, my big company won't let me do because it's all timeshare and it's expensive and et cetera. I do think, if AI is the seed of the next wave, then for it to really generate that kind of excitement, it has to be set free. It can't be controlled by OpenAI and Anthropic. Once there are models that people, and there are models that people can build on their personal computers. I know people who run their own models on their own personal computers. They're super slow, obviously, but they do it. And it's kind of a proof of concept. And the first personal computers were super slow. But once you have that, where people can just use it however they want, people come up with ideas that big companies just will never think of, that OpenAI and Anthropic and Google and Microsoft will never think of using these things for that, right? And I don't know what those ideas are because that's the point, right? Um, so when that happens, that could be the seed of the next wave. And the problem there is it was hard to invest in that until, really Apple Computer was going public. I mean, you could have invested in Apple earlier than that, like 1976 or so, and you would have made a good amount of money. But it's a hard thing to invest in early in the wave. You really have to kind of believe. It's more of a belief thing than a data thing. Like there was certainly no data behind investing in Apple Computer in 1976. Like anybody who invested in that company then was on a leap of faith. You know, and so I think there's going to be a lot more of that. And I think part of that is maybe making decisions, having judgment, looking at things and saying, could this be the future? Like it's not obvious it will be, but could it be? Could this be something that actually changes the world over the next 50 years? Like, I mean, the personal computers changed the world, right? Um, so is the next idea, is there something here that is just different that could be that? Um, I don't know the answer to that. That's why I retired. If I did, I would still be in the game.
But I think that's such a good summary from the very beginning of the conversation, Jerry, is that when the white knuckled grip of the models, the enabling computing power is set free, then it opens up your whole paradigm of surprise. That is
Yeah.
always a definition of the early stage of the next cycle. So that, I think that's what we should all be looking for, that kind of the signals of the crumbling around the control of a few companies owning all of this.
Yeah.
So I think we're going to have to end it there, listeners. Jerry, it has been such a pleasure. You've taught us a ton. I appreciate all your views. Thanks for joining us, and listeners, we will see you next time on
All
Capital
right.
Decanted.
Thanks, John. I enjoyed it.